Hey, this is Paul Hamilton. Another video, I set up the tax return for a middle income family making $40,000, family of four, and um, with no special considerations other than they had a couple kids, uh, paying no taxes during the year. They would get about $2,000 to live in America, okay, which is a pretty good deal. Uh, in this video, I'm going to add one thing, and that is suppose that either spouse had a side business. So make it the second spouse, doesn't matter. But so suppose the wife, will say, had a $10,000 Mary Kay business, pretty profitable. My wife had one, not profitable. Anyway, um, so we put that in. All right, you got to click off it, and we can see instead of getting about a $2,000 refund, you're going to pay over $2,300 due, assuming again you didn't pay any federal taxes during the year, which most people would have that withheld from their check. Um, so what happened here? Well, for one, obviously they had $10,000 more income, so some of that would be taxed. A couple other things that are happening though is, scroll down here. They still get the $1,000 child tax credit, so they're not. That doesn't. That's not impacted. Their tax is higher because they do have more income. Another thing is um, when you're when you're working for someone, you have payroll taxes, Social Security, and Medicare directly taken out, so it's all settled. When you're self-employed, you have your own business, those aren't taken out. So you settle that in your tax return. Not only that, but you pay both the employee and employer side. So you pay 12.4% of that $10,000. Essentially, that is Social Security taxes, and then you pay 2.9% for Medicare taxes. So that's where this additional $1,413 of tax comes in. You do get half of that as an adjustment to income, but this is dollar for dollar addition. This is just a slight $700 deduction from what would be taxed at what turns out to be 10%. So it's only about 70 bucks that the adjustment saves you. So that is adding business income. I'll just note one other thing too, in the spirit of Donald Trump. Yeah, okay. Another thing that happened, I meant to mention there too, your earned income credit goes down because you're starting to get outside of that range where you're not really low income anymore. On the other hand, if you took a $10,000 loss on your Mary Kay business, we didn't lose that much, just a few hundred. But anyway, now your refund, instead of being $2,000, is over $5,000. Um, so that is one way. If you try to have business and you lose money, or maybe you break even off it, it doesn't cost you anything. So most of these other categories, essentially none of them can you make negative. Other than that one, you can also do a capital gain loss, as it may be. Anyway, so that's adding business income, whether it's in the positive or the negative, could have a very significant impact on your refund. So make sure to get that number in accurately. Again, this is just a simulation. It's not the actual return. You can't use this to file your taxes in April of next year. But it should give you a very accurate result, assuming you put in the right categories.